Today is Mark Routh, the CEO of Prospex Energy. Thank you for joining us, Mark. How are you?
I'm good, thank you. Thanks for having me today, Mark.
Well, it's good to be speaking. It's the first time, of course, we've met here on StockBox. I wonder if you could perhaps just introduce the company first of all, give us the elevator pitch, if you like, the high-level overview.
Yes, just a high-level overview. What I'm displaying on the screen here is the corporate presentation, which is on the website. And for those that don't know Prospex, we're an AIM-quoted company, and we have three producing assets onshore in northwest Europe. One in Italy, northern Italy, and two in Spain. That said, Viera in northern Spain is currently shut in since April because the operator there is doing a workover on the main producing well to get it back into production, which I hope is going to happen very soon now. So those are the assets. We have Selva Malvezzi in northern Italy, Viera in northern Spain, and Romeral 123 in southern Spain. I just want to point out we've got 11 new gas wells to be drilled on these three concessions in the next 18 to 24 months. It's all going to be depending on permitting. So we have a real growth strategy here.
So it's 11 new wells across all the projects?
That's right. So it's 4 in northern Italy, 2 in northern Spain, Viera, and 5 in Romeral, southern Spain.
Okay.
The ones in the Viera wells already permitted to drill. The 4 in Italy and the 5 in Romeral are in the permitting process and have been for some time. It takes time to get these things permitted.
So that in Spain, and that was scheduled for the second quarter. So that's a bit late then, isn't it? But do you plan on doing that this year?
Yes, well, I've got a schedule which I'll share in a second. I just wanted to point out a couple of things. The company is currently debt-free, and we have no warrants standing. So that is something which is beneficial for shareholders. What I do want to talk to is this slide here, number 21, which is the earliest possible estimated drilling timelines that I see happening for these wells.
Okay.
So right now, we're doing the workover in Viera. That's happening currently. When we get back into production, we're going to have 9 or 10 months of production from that field before we start drilling new development wells in Q2 26. The plan for and we are effectively 7.5% working interest in this field, actually 7.24% in the field. The production income from that well, when it gets back into production, will be accrued to fund the development wells in Q2 26.
Okay.
But importantly, the operator, PXEN Energy Iberia Limited, which is the Spanish subsidiary of PXEN Energy, which is based in Dallas, Texas, they're looking to get a debt facility to help fund the development wells. So it could be that the funding for those wells could be entirely covered by accrued production income and the debt facility arranged by the operator.
Okay. Well, that's obviously very good because that minimises any dilution, which already I know you don't have that many shares in issue, I don't think. So it's good to sort of maintain that if you can.
So, so on that subject of dilution, this is a very raw topic for some of our shareholders. We've just done this fundraise for 1.2 million, and we've done it at a share price which was lower than I'd hoped at 4.5p. This was a hard decision to make by myself and the board of directors because the option was to, if we didn't fund the workover, then we'd have to dilute our ownership in the asset.
Sure.
Now, it's a business decision. Yes, it's painful to dilute shareholders. We're all shareholders and we're all in this together. It's painful to dilute shareholders, but it's better than diluting in the asset because the Viera asset is going to throw off some 8 million euros per year of free cash flow on the current working interest. Okay. And that's from the Hanneman Partners research note.
Okay.
So it's although dilution is painful, it's better to dilute the shareholders by a small degree than diluting the asset and thereby not having as much production income as you are planning.
Absolutely, absolutely, and of course you're on the stock market to raise capital, indeed to grow the business and grow revenues. So it sounds like you made the right call there. The wrap was offer there as well. Was it all taken up pretty ambitiously?
No, we went out for 500 and we got 137,000.
Okay.
It could have been more. I understand that people are concerned because we were going out to fund a workover, and there is, people will perceive some risk in that. Now, we've got a well which was producing before, and the tubing leaked. Okay, we know there's gas behind pipe, and the operator is repairing that leak in the tubing.
Right.
So when it gets back in production, I say when, not if, we're going to be flowing gas again and back into the production where Viera will be, up to 45 or 50% of our total production across the piece. So it was the right thing to do to fund the workover. Now, our coffers were a little emptier because in April this year, we acquired 50.1% of Taba Energia, which is the company which owns El Romeral. That's the power station in southern Spain. So that cost the company more than £500,000. So our sort of reserves from crude production income were diminished. There's also taxes and royalties to pay in Italy and other factors. I'm not going to bemoan the fact that there are things that have to be done. So if I'm faced with diluting the asset or diluting the shareholders by a small degree, it's a business decision.
Okay. Yeah. And you think that the concern or the amongst investors is the workover, but it sounds from what you've said there that it's a relatively straightforward workover program.
Yes, but then I don't expect everyone to understand that a workover has varying degrees of risk. Yes, think that there is risk in any operations in the upstream gas business. There's risk all the time, but we can mitigate that by having a competent operator doing a sound job, which I know they are. Now, the time schedule to get back into production has slipped a bit, but I'm afraid this is a complicated well. It's 4.5 kilometers deep, and it required a specialized workover rig to pull the tubing and replace it.
Okay.
And operations can take some time. But anyway, enough on that. So onto Taba, which is the company through which we are invested in El Romeral, the power station in southern Spain. We are in the process of permitting 5 new wells on that concession. Now, the earliest I can expect that to happen is Q4 this year, probably Q1 next year. It could slip beyond that because the Spanish ministry is not a particularly quick turnaround time. We've already been in the process for more than 18 months to try and permit this well. In fact, longer if you get the preparation work. So we're looking to drill 5 wells there. We're 100% in this asset, so we have the opportunity to farm down. So that's the industry speak for basically selling off, let's say, up to 50% of the asset to fund our drilling campaign, so that we can get a carried interest in the drilling. Now, I would only entertain doing that once the permits are in the bag, because then I've got a tangible asset which I can then sell on to others. So, the last thing I wanted to touch on is on Italy. We've got a 3D seismic acquisition program happening in September, October this year, and that is to optimize the drilling targets for the 4 wells in the permitting process in northern Italy. 2 plus 2. 2 of them are contingent resources and 2 of them are prospective resources. The difference being contingent resources is drilling a structure that's already been drilled, so it just needs the well to produce and be completed. Prospective resources means it's an exploration asset. I can show the maps, but of that, because it's quite interesting what there's the map of the concession outlined in green, and the 4 wells that we're planning to drill: North and South Selva and East Selva and Cadena. And the 3D seismic is going to cover the entire concession in order to optimize these drilling targets.
Okay. Well, from listening to you here for the first time, I mean, I wonder if you perhaps can summarize, if you like, the investment case to shareholders, because from my point of view, it seems like you've got drill holes planned, ready to go. You have a plan to fund them through, as you say, the non-dilutive funding and the revenue that's coming from the well that's currently being worked over, which, as you say, throws off about 8 million euros free cash flow per year. So, I mean, on the surface, it sounds like you have a solid business case and a plan to ramp that up. I mean, what would you say to investors?
Well, yeah, it's not just on the surface. My mission since I've joined Prospex is to grow the company. And I have demonstrably delivered on increasing the number of assets and our share of those assets. In April 22, we increased our share of Selva Malvezzi from 17 to 20%. We acquired Viera in northern Spain in August 24. And in April 25, we acquired the 50% share of Taba, which put us up to 100% in Romeral. So I'm already delivering on growing the company. And from those 3 concessions alone, we've got 11 wells to be drilled. 2 of them are permitted and 9 of them are in the permitting process. That is a growth strategy for a small AIM-listed company, which I would argue is unusual because we can do this and grow the company and get it to a much larger energy producing business in Northwest Europe, energy which is needed by those countries. So I think the business case is not just on the surface. Deep down, it's based on producing natural gas and energy into a market where there is high demand.
Okay. Well, thank you very much for your time today, Mark Routh, the CEO of Prospex Energy.
Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.